Good morning, everyone. My name's Byron Wu, and I'm a rising junior from Thomas S. Wooten High School. And I'm here with my partners Joshua Song, who is a rising sophomore from River Hill High School, as well as Justin Joel, a rising sophomore from Centennial High School. And we are part of the program BranchOut. BranchOut is a nonprofit program with Veritas education leaders that was co-founded by Dr. Yusheng Wu and Mr. Richard Wong in 2015 and grew from 20 student volunteers to over 150 student volunteers in 4 short summers. Our high school student mentors come from over 40 different schools across 4 states.
We started out as a pure STEM mentoring program working at community centers, homeless shelters, and county summer credit recovery programs, and have expanded into a community outreach program to promote cross-cultural understanding by featuring community heroes, creating research articles, and organizing career panels. As an award-winning community engagement program, we have received endorsement from U.S. Congress, including Senator Tim Kaine and former Congresswoman Barbara Comstock. Additionally, our innovator program won the U.S. Congressional App Challenge Award last year.
As part of BranchOut's goals to promote civic engagement, community, and STEM education, we are so excited to be presenting this very informative career panel. The investing industry has been and always will be an important part of our modern society. One of our featured panelists who will be speaking for us tonight is Dr. Alan Zhang. Dr. Zhang is Vice President of Enterprise Model Risk at Freddie Mac, where he defines the framework, policies, and procedures for model risk management and validation in the investment and capital markets area. Dr. Zhang, it is an honor to have you with us today. Could you please introduce yourself to the audience?
Oh, thank you. This is Alan San, and I'm certainly glad to be here. Thank you all the student volunteers who invited me to this wonderful program. I know Dr. Wu and Richard for a while, and actually on a personal note, my son participated in this program a couple of summers ago. Of course, now he's in college. So thank you. I know he cherished his experience with BranchOut a lot. Really want to thank you guys for this wonderful opportunity. And as you can see, this is a very exceptional panel. My fellow panelists are leaders in financial inclusion, fintech, and capital markets. I myself will be thrilled to learn more from each of them. Of course, the market, the economy, the very fabric of the society, all need innovations in all these areas. So for me, as you just mentioned, that I'm currently with Freddie Mac. I was doing the, instead of on the front line of doing the, running investment strategies, I'm on the second line, making sure all the financial models are working fine for business decision purposes. And then before that, I spent a fair amount of time at Fannie Mae, our bigger sister organization, in this mortgage finance industry, two pillars to support all this whole housing market. And before that, I was at U.S. Treasury for about 6 years. And at that time, I built this quantitative strategy group, supporting the Office of Data Management to manage our trillions dollars of the Treasury securities issuance. As you all know, that America is the superpower, but we are also the most in debt. So to manage all the trillions dollars of borrowings, day in and day out, it's a pretty serious task. And to do that, we do need a lot of math. So before my treasury experience, before my treasury time, I also spent a couple of years and at the beginning of my career at Citigroup, basically working at this quant after I got my PhD in finance. But today, what I'm going to am I supposed to just start to talk about taking the topic now, or do
just briefly introduce yourself? That's
oh, sorry. I got it.
Thank you.
Sorry, I got it wrong. Sorry.
Thank you for the introduction, Dr. Zhang. Our second speaker will be Mr. Sherman He, who's the co-founder of Stori, a company that helps fight for financial inclusion for lower class aspiring workers. Mr. He, thank you for being with us today. Would you like to briefly introduce yourself?
Sure. So my name is Sherman, and actually, if I give the extended history of me, I was born in China, raised in China, and for like similar experience, I guess, with some of this group and not necessarily with all. and came to States for my graduate school. And I went to GW and NYU for my MBA and other master degree. After that, I went to Capital One stayed there for about 12 years. So I started in Capital One in the credit card department on the credit risk management. Then I moved in within Capital One. I was in small business banking of Capital One, managing the overall portfolio and deposit lending, overall financial planning, strategy planning. And then my last role at Capital One actually was a director of digital product management. So you can see that the experience was quite different along the way. Then after leaving Capital One, actually, I just co-founded Stori. Very interesting because now our market is in Latin America. So we are one of the top 5 fintech in Mexico as of now, issuing credit card in Mexico. And very quickly, we will be expanding in multiple countries as well as multiple products line. So we are in the process of actually closing another round of fund, and Stori actually will be evaluated very close to unicorn very soon. So it's quite an interesting journey, and very happy to be here and feel very honored to be invited here because I have 2 kids, and one is 9 years old, one is 7 years old, both girls. We have been always talking about contributing to the community and joining nonprofit work, helping others. I think they will be very proud that I'm in this event and helping others. So thanks again for inviting me here.
Thank you for the introduction, Mr. He. Our third speaker who will be joining us this evening is Dr. Richard Duan. Dr. Richard Duan is the founder of Diaconia, a fintech consulting firm, and prior to that, he worked at Point72, Saba, UBS, Instinet, and Jane Street Capital in equity, futures, FX, and credit derivatives research and electronic trading. Dr. Duan, thank you for coming to our panel. Could you please briefly introduce yourself for our audience?
Oh, hey, yes, it's a privilege to be here. I remember myself to be in your shoes, rising junior, rising senior, thinking about the outlook of my future. And it's a wonderful privilege to be a panelist. I started off being a physicist in grad school. When I came, I did my undergrad degree in China. And when I came to the States to start grad school, I was determined to be a physics professor, but it didn't turn out that way. I started the only job I could find after my graduation was to become a high frequency trader on Wall Street. And at that time, I think a friend of mine who's a parent of one of you guys told me that once I started a finance career, I won't be able to switch back to any other career. And that prediction a few years ago has held true since then. So really excited, really curious about what kind of questions you may have in your mind, and love to give you a few minutes introduction to what I do and what I did. Thank you.
Thank you, Dr. Duan. Our fourth speaker is Mr. Sandilya Hota, who has over 20 years of experience in various areas of finance and is currently leading the capital markets team as a vice president at Pentagon Federal Credit Union, or PenFed. Mr. Hota, it is a great honor to have you with us today. Would you like to briefly introduce yourself?
Sure. Can you hear me okay? Okay, great. And it's a privilege and honor to be among this distinguished panel. Again, it's fantastic. And then I have known Richard and Sharon, Dr. Wu for a long time. And I know that they have been doing all this great work, but I'm fortunate that I was able to be part of this panel and got invited. So in terms of my background, similar to Sherman, I grew up originally in India, came here for my graduate school. And after that, I worked for a small consulting company in PricewaterhouseCoopers for 15 years. I was in their consulting practice. So we focus primarily on structured products, whether it's like asset-backed securities, mortgage-backed securities, CLOs, so on and so forth. And then we also had various projects in terms of like regulatory consulting, whether it's Dodd-Frank, capital stress testing, and then you name it. And then more recently, before I left PwC, I was working a lot with fintech organizations trying to get their plans in place for accessing capital markets, whether it's through securitization or through other debt offerings. And then I joined PenFed a couple of years ago. Here I'm responsible for loan portfolio, pricing, valuation, purchases and sales, and then also helping drive their securitization initiative. And I'm happy to share more details down in the panel later.
Thank you, Mr. Hota. We are thrilled to have all of you with us this evening, and I'm sure you'll all provide excellent information regarding the industry for all of us. Audience members will have an opportunity to ask questions for our panelists at the end, nearing the end. So I guess we could get started with questions. So first, I guess I could ask, what part of investing do you enjoy most and why? This is directed to any speaker that would like to answer.
Well, let me try it out. Let me try it out first, and I guess my my fellow parents, please jump in. I think when I think about investing, I think into much I was thinking about much broader picture. It's not just about sort of investment in the equity market, in the fixed income market, FX, and derivatives, so on and so forth. I think investing basically has something to do with how to read the market and how to read the economy and how to come up with the strategies for a business, including investment management shop, to basically to make money, to return capital to the investors. In my experience, I think there's definitely a difference between the public sector and the private sector. When you are trying to make a decision in the public sector versus when you're trying to make a decision in the private sector, the effect, the sort of your utility function, your goal might be very different. And then in order for you to achieve your goal, it sort of, in my experience, it sort of requires a slightly different mindset. My experience, for example, when I was into Treasury, when we were thinking about how to manage this trillions of dollars of debt borrowings, the guiding principle that we bear in mind is not to make a profit, because when you are the market, when you provide the most fundamental securities for the whole economy, for the whole capital market to operate on, your goal is to make sure you are providing a fair play field for all the market participants. But now when I was into Freddie Mac and Freddie Mac, we're thinking about our capital market, we're thinking about our return portfolio. You are trying to just look in a very specific sector of the capital markets. I'm looking at mortgage-backed securities. I want to make sure that I pick the winners, and I'm going to I need to time the market, and I need to sort of execute my trading strategies very, very efficiently. And to do that, it requires a different type of analysis. But in the end, I think quantitative skills aside, in the end, it is very important for any of us, for any of the professionals, to be able to communicate your ideas to all the stakeholders, to make sure they understand what you're trying to achieve, whether you're the policy, whether you're a policymaker, or whether you are sort of the chief investment officer. And sort of that's my take.
Thank you, Dr. Zhang. That was very insightful. Would any of the other panelists like to chime in?
I can chime in. Basically, when you're talking about investments, as Dr. Zhang said, you're trying to connect the dots, right? So there are a lot of moving parts in the economy. There are a lot of things that are happening around you that impact you on a day-to-day basis. And then you're trying to synthesize all that information, connect the dots, and then trying to come up with some sort of a hypothesis saying, hey, this is how this is going to work going forward in the next short term, whether year two or even the longer term. So then you, in addition to that, you are also trying to rationalize that in terms of with facts, because these days you have so much information that is around you, and then so much analytical and technology, like in terms of capabilities that can slice and dice data and then visualize information at your fingertips. I think that makes it very, very powerful. And then the investment paradigm has shifted a lot. Like in say 15, 20 years ago, where very few individuals maybe in Wall Street have access to information. Now it's widely available. And you have significant amount of tools at your fingertips, and even through apps on your phone to actually look at them. So I think it has changed a lot. There's a lot more participation. So depending on when you talk about investing, whether, as Dr. Zhang said, it could be equities, it could be fixed income, it could be so many other things. But I think end of the day, it is connecting the dots, coming up with a hypothesis, and then trying to, obviously everyone wants to make money when they are in finance and capital markets, no doubt about it. So it's like, okay, is the theory going to work? And then most of the time you win, sometimes you lose, and then that's the way finance works. And then as long as you're on the right side of the equation, that's good. So.
Yeah,
Thank you, Mr. Hota. Oh, sorry.
Yeah,
chime in
no,
as well? Oh, no, I was just saying thank you.
Yeah. Well, I would wholeheartedly agree with Dr. Zhang and Dr. Hota. So this is a pretty open-ended question, right? What kind of financial assets would you invest in and why? I would encourage whoever asks a question to take a step back and actually think about what investment is for and what kind of investment are you targeting at. So for example, majority of us, when we invest, we're trying to increase personal assets. We're trying to make some money. But investment per se, if we just take a step back and then look at the investment world from 5,000 feet, what's the purpose of investment world? What's the purpose of education? What's the purpose of a government stipulations and legal compliance? And what's the purpose of risk management? Well, the grandeur, the big picture of the purpose is investment creates a channel, a vehicle for us to optimize our assets so that the industry or the company that creates the most value for human thriving gets the most assets. Does that make sense? So capital market is there so that it's there to allocate assets so that the entire human society can thrive. So with that understanding, then I would basically follow Dr. Zhang and Dr. Hota's suggestion is you dive into the different asset classes, different kind of financial products, and really understand, first of all, you need to understand the risk. Second of all, you need to understand whether the investment logic or investment philosophy of that particular financial assets or the specific asset matches with your investment goals. So for example, if I'm investing for my retirement account, I will be very, very conservative, probably. But if I have $2,000 of opportunistic play money, then the risk tolerance on that can be a lot bigger. I don't care if I lose these $2,000. That's then I may actually choose to play with something exciting, something that's more risk tolerant. Something like cryptocurrency. And so I think to summarize, I think it's my answer to that open-ended question is to attack in 3 angles. Number 1 is to understand the grandeur picture of the investment landscape. Number 2 is to understand your own goal and your own risk tolerance. And number 3 is to find that financial assets that's in line with your goal and your investment philosophy. Thank you.
I feel I'm learning a lot from all others. Like I feel like my background is very like massively different from all other experts in this panel. So I don't think I can say anything better than they do. Anything I say in that direction will just be the bullshit, right? So then I actually want to provide a different aspect looking at that, because I am not the trader. I have some investment in the stock market, but I also, whenever I think about investment, especially financial investment, I think there's one aspect that maybe we haven't covered yet, which is the venture capital. Venture capital actually is one thing that I work a lot nowadays because like we have lots of global tier 1 investors on our board, including the investor of WhatsApp, investor of Facebook, investor of TikTok, and actually co-founder of Alibaba. We have lots of great profile investors on our profile. So my understanding of investment actually is from that VC perspective of why they invest in us. And if you become a VC in the future, which I strongly encourage some of you become that, because I clearly feel there is a desire and there's a need of the second generation in VC in Silicon Valley. I strongly advocate for that. How they decide which company they want to invest in, they actually look at the founder's profile. If this founder has experience, in terms of passion, in terms of know-how. They also look into if this company has a product and market fit, because nothing matters if there is no product market fit. In a way, you can even say that you can scale that hypothesis or theory into the public market, right? If you look at the stock market of Moderna, as of now, why Moderna's stock price increased 10 times? Because the vaccine from Moderna, there is a perfect product and market fit in the past 18 months. This is why the stock market increased by 10x. That's why always understanding the product market fit is a key for investing, as well as like understanding who you are dealing with in terms of founders. I know that's a non-traditional way of defining investment, but just my personal experience.
All right, thank you all.
Thank you, Mr. He. And I think that I think I learned a lot from that. Even though you claim that everything else has already been said, I learned a lot from that. And I think most of the audience can say the same. As for the audience, keep in mind that if you would like to, you are more than welcome to ask questions in the chat, but they will be addressed down the line. So the next question I'd like to address is that all of the panelists and your answer a minute. What does it like?
In case Byron cut out a bit, he asked, what does a typical day at your work look like?
I have a non-traditional way, so I will let others answer that first.
Well, of course, now it's still the COVID time, right? Everybody's working from home, so there's there are a lot of meetings, that's for sure. Every time whatever you want to talk with your colleagues, you have to set up a meeting, and so it's never ending, and the work-life balance becomes very blurry, which I do not like. But anyway, I think the typical day will always involve, of course, now I'm in a corporate environment. It always involves talking with your colleagues, the senior management, and working with your team, and make sure, and all the discussion typically is about what is the problem, what is the approach we can take to tackle the problem, and what's the progress of for solving the problem, and what kind of obstacles we have in the with all our approaches. But the thing that all this even in the modeling, currently I'm working in the model validation area. So, but even you think about all this model development and model validation in all the highly quantitative area, 90% of the time, the discussions is not about the details of the models themselves. For example, you may have a highly highly complicated model trying to look at let's say in the capital market, they say for example, Freddie Mac, look at all the loans we have. Let's try to determine the sort of how people might prepay on their loans, or how they may get in trouble, and so they may default on the loans. You may have highly complicated models, but a lot of discussions that I have, sort of from a managerial perspective, is not about modern details. It's all about how to define a problem and how to solve the problem, and how to communicate the solution to other stakeholders. And so, of course, in the different stage of a career, the challenge you have might be different. It is very important, of course, to have strong quantitative skills, but bear in mind that is sort of definitely a very, very valuable skill set for you to look into the details. But in order for you to sell your idea, to make yourself prove that you can provide useful information, and therefore you are a valuable team member for this organization, you have to be really, really efficient in your communication. So being a math guy, being a quant guy is not just about solving, partial differential equations. It's about how you break down the message and communicate the message to all the involved parties. So, in short, every day, you spend a lot of time, doing some math, trying to work out the problem, but then you will need to spend a lot more time try to tell your stories to a lot of different people.
Thank you for that, Dr. Zhang. Would any other panelists like to describe what their day of work looks like?
Sure, I can go next. In terms of, I couldn't agree more, Dr. Zhang. I agree with all the meetings. There definitely most of the day gets taken away with meeting invites, especially in the Zoom world. When you're in a regular office environment, you actually see people in the hallway, you say hello, and you have conversations, and then you gather a lot of information through those conversations. Now with Zoom meetings, you're back to back on calls, because even if you want to reach out to someone, their calendar is so packed that you need to make sure that they have some time for you to answer some of your couple of questions, basic questions. But anyway, my day starts early. I start looking at the market developments. The meeting started at 8:30. And then as we progress throughout the day, similar to Dr. Zhang, it depends on the priorities of the week, priorities of the day, then how you're actually solving the problem. And then more importantly, I just want to say two things. One, a lot of times people underestimate the value of developing relationships, work like professional relationships. So end of the day, they're very, very important because as you are progressing in your career, they're only 24 hours for anyone. So you will have to be dependent on other folks to get stuff done, especially on larger engagements. So in addition to your technical skills and communication, Dr. Zhang said, you need to build your relationships across the organization to get things done. And then basically there's no substitute for in-person communication. So if you have a chance, do pick up the phone or walk over to that person's desk if you're in the office, to that person, so that really helps a lot in building those relationships instead of just sending him a text message or something like that. So I know the newer generation would like to text more than pick up the phone and have the conversation. My 2 cents is that, yes, technology is great, but you use this in a balanced way, and then complement your in-person communications with your technology communications.
Yeah, I also like to chime in. I saw there was some question that's addressed to me. So I also like to give you three things to chew on. Number one is a typical day has migrated. My former boss, my boss, to me, to my subordinates, our days are very, very different because we're basically working different eras. So, for example, my boss, his typical day when he started out on Wall Street was 6 o'clock, pick up Wall Street Journal from the door, and use a carting to the New York Stock Exchange, hand it over to his bosses, understand the market, read it as fast and as much as he could before the opening bell rang, and then so that he can become a more informed trader on the floor. Now, when I started off as a trader, I no longer needed to pick up Wall Street Journal from the door because everything is electronic. So that becomes, 8 o'clock, start to prepare all kinds of spreadsheets to get the machines ready, to check on, risk tolerance, to make sure that once I turn on the machine, it won't be doing crazy trades and all that. And then through the middle of the day, it's refining models, refining trading logic. At the end of the day, it's always reporting, it's always meetings, it's always wrapping up, it's always preparing so that the second day can have a smooth launch. And then my subordinates, their life has been very much online. So everybody, nowadays, a hedge fund doesn't have to have an office. A hedge fund can, have somebody who's working Abu Dhabi, somebody who's dialing in from Turkey, and then you actually belong to one hedge fund. So very much, Zoom driven. So that's along the trajectory of how much the industry has changed. The second thing I'd like to say is it depends on what kind of job that you have. So if chances are, if you work for a large organization, a large corporation, you'll have more meetings, and maybe you devote less than 50% of the time on the technical issues, but you have more than 50% of the time you're dealing with stakeholders, and the smaller hedge funds, the more efficiently run, the startups, they're much more to say very, the least bureaucratic is the wrong word, because politics always exists whenever there's people, but there's less meetings. People will shout across a room. That's your meeting. So I think, it also depends on what kind of corporate culture that you have. And then, the more structured, the bigger the organization, the more meetings you'll have. The third thing I like to say is it also depends on what type of business. So right now we run a fintech consulting business, and I actually suffer from COVID. COVID actually took away quite a number of my clients and client businesses. So my days are pretty leisurely. I'm basically thinking about how to serve existing clients better, how to score new clients, what are some of the things I could do in the meantime, trading on my own, and so on and so forth. But if you're a hedge fund, then it depends on whether you're a short-term hedge fund or long-term hedge fund. If you're a long-term hedge fund, you spend much more time on research. Your pace is a lot more laid back. If you're a short-term hedge fund, if you're a day trading firm, then it's much more heated in terms of the culture. So that's just to summarize, I'm just thinking, so industry is changing, so your typical day is changing. It depends on your typical day will be very, very different, very, very dependent on the type of business you're working for, and also what type of the business it is. Yeah, thank you.
So for me, actually, through my professional career, I think every single day, no matter which position I hold, we do two things. I do two things. One is very aligned actually with Alan and I think Sandy said. I do two things. One is problem solving. Another one is influence. It's just at a different stage of your career, based on your level, based on your scope, based on your responsibility, that slightly mean different things. When you are a performer, when you are just into the company, the problem you are solving is very tactical. Like many times, maybe it's math driven, many times it's very action driven. That's the problem you are solving. And the level of influence you have very likely is with your peer or with your manager saying, we want to do this, or this is the right recommendation. So that's your level of problem solving and level of influence by then. Then where I am right now, I still do those two things, but the scope becomes different. The problem solving I have is starting to be, what's the vision of the company? How to maximize the value of the resource I have, knowing that we have limited resource at a single time, and how to ensure we build the positive culture. So that becomes a problem to solve. And the influence becomes quite different. Actually, I'm no longer influence my manager because literally I don't have a manager anymore. But I want to influence all the people reporting to me. This is the right thing to do. This is why it's good for the companies. So every stage of your company, depending on what you do, I think for me, I do two things: problem solving and influence. But my recommendation is that knowing what is their expectation of you at that point, what type of problem others are expecting you to solve, what type of influence people are expecting you to have, and then go one or two levels beyond that expectation. That's how actually you will be perceived very differently as a thought leader, as a great performer, as a superstar. I think from my experience, because I work with lots of young people in the past, especially when I was at Capital One, and now I'm working at a startup, I also have experience that. So sometimes people do not know what is expectation of them. Or sometimes people just be very happy to do the things they are expected to deliver. They do not go beyond that. So that's one case where I see that people can do better. Another case where I do see people can do better is some people can influence, but their problem solving skill set is not matching that influence. That can also cause the problem. That's when we refer to those people as talker, but not doer, right? So essentially you have to balance that and know what's the expectation of you and deliver a few levels beyond that.
Thank you, Mr. He. I'm pretty sure many young members in this career panel would really appreciate that advice. So that was all very valuable advice and insight from Dr. Zhang, Mr. He, Mr. Hota, and Dr. Duan. At this point, if any members in the audience have any questions or clarifications for our panelists, feel free to please type them in the chat box. So moving on to the first audience-specific question, one person asked, what are some typical career paths for a student in business finance major? How is the income level after graduation and in the long run?
Let me share some personal experience, because I want to tackle the second one, the income level after graduation, because I personally experienced something very interesting. So I remember after my graduate school, that was when the job market was pretty good, right? The job market is pretty good right now. So I think some of you guys will be in a very good situation. But back then, I sent out a few interviews. I got all the offers from interviews. And I chose Capital One, but Capital One's income of all the offers I got back then was the lowest. Actually, it was like 50% lower compared to the highest job offer salary-wise and title-wise that I got back then. But I choose Capital One because I feel there was a culture match I did feel. And I was interviewed. I'm not advocating for Capital One because I'm no longer for Capital One. So I'm not here to encourage everyone to join Capital One, right? So this is a personal story. I was interviewed in the place that I feel the environment, how they decorated the office, how they were talking about the business and the people. I just feel the vibe. And the versus another place where they offered much higher income, I feel that was pretty old school, that I don't feel the sense of belonging. So for me, actually, the first thing I want to consider after graduation, of course, income matters, like money matters, especially when you don't have any money. But in the long run, what I feel is you may not know what you are passionate about, but I think you may know what you don't want, and you want to avoid that. If some place is something that you feel like this is not a match, but offer the highest pay, you still may not want to do that. So that's number one. Number two is think about what you can learn in that environment. Right after graduation is where is a perfect opportunity for you to learn. Either you choose enterprise, either you choose startup, but knowing what you want to learn out of that matters much more compared to the income at that stage. Then after that, I can guarantee you normally income will catch up fairly quickly.
Yeah, I'm trying to detect the pattern. We're going in reversed order, right? So, thank you, Dr. He. Actually, I learned a lot from your inputs. Yeah, so I would suggest you're already a business finance major, so you're heading in this direction. The first job is very, very important because that sets the tone for your career path. So if you can, really take your time, do the homework. Don't just take the first offer. You know, if you only have one offer, take it. But don't just say I need a job. I have to be working right now. Here's an offer. Let me take it. So to Dr. He's point, once you started off on a certain trajectory, then it's very, very different. It's very, very difficult for your second job to be in a different realm. Basically, if you started off being a stock trader, you're basically saying no to bond trading, credit trading. You're saying no to risk management. You're saying no to a whole lot of things. Okay, so yeah, understand the landscape is very important. In terms of income level, I think the industrial level, here's what I like about America is, it cannot be off too much, because job is a market. If it's too unfair, it's just not going to work. So do your research. There are tons of organizations, tons of survey like Glassdoors, tons of websites that will give you salary information. So get that background information. Talk to people in the industry. Talk to one of us, so that we can perhaps give you a valuation of whether whether something is on par or not. But yeah, to Dr. He's point, I chime, I would say 100%, 200% agree that income level is important, but that shouldn't be your number one consideration. Culture, career direction is your number one consideration to take on the first job.
Thank you, Dr. Richard Duan and Sherman He. So based on time, if Ms. Dr. Alan Zhang and Mr. Sandilya Hota could answer the next audience-oriented question, that would be wonderful. So the question is, what are the career prospects for someone that may be considered a late starter in finance?
I can start. It depends, right? It depends on, as my other panelists pointed out, finance is a big ocean. So it depends on what you're interested about, what is it that you're passionate about, and then because when you talk about a career, the way I think about it, it's a marathon. It's not a sprint. So it is not something you just do it for a short time and then start changing it, especially if you're doing it a little bit later in your career and you're switching to finance. You may want to be really thoughtful in terms of what's that you're passionate about. And once you decide that, and then again, if there are definitely a lot of certifications, there are other things. I don't know where you are in your career process. If you were relatively younger in your profession, maybe a couple of years, and then you decide that, okay, you want to pursue finance. At that point in time, you still have a lot of time to do some of these certifications and other things just to have a level playing field, right? So there are plenty of opportunities. There's so much technology. There's so much innovation going on with fintechs, as you can see on this panel. There's so much change that's happening in the finance area. So it's an exciting time to be part of finance, and then and I would definitely encourage them, but be thoughtful. Make sure that whatever you're picking is what you're passionate about, and that's what you want to do in the long run. as Dr. Duan said earlier, talk to professionals, get an understanding from them in terms of what the life is going to be after you pick a field, and then what are your opportunities in that field. So again, do your research. I mean, end of the day, that's what it's going to come down to, so that you're making the right decisions.
Alan, you're on mute.
You're muted, Dr. Zhang.
Host can unmute.
Am I muted enough?
Yeah, we can hear you now.
Okay, great. Yeah, I totally agree with you guys, and also want to point out that there's a really no late starters, especially in finance. I mean, look at us. I think a lot of us probably didn't start out our career or didn't start our college thinking that we'll be in the finance profession. I think Dr. Duan, you're one of the late starters yourself, right? You did your PhD and thinking about being a physicist, and you ended up being a high frequency trader. I switched my focus to finance econ stuff when I started the graduate school. I think the most important, of course, is a passion. You need to find, if you want to get into the finance area, this is such a huge area. You can do so many different things, from investment banking to trading to asset management to risk management. There's treasury, corporate treasury function. There's so many different things that you can do, and there's no job is too small or something's more glamorous than others. Everything you do, if you do well, you will be the leader in that profession, in your organization. Doesn't matter what whether you are accountant, whether you are the trader, or whether you are the chief risk officer. It doesn't matter. You got to really like what you do, so you can endure the long working hours. So you can enjoy the conversation, the communication with a lot of different people. And then, of course, it is very important for you to have a honest evaluation of your skill set. What kind of skills that can be transferable, that can be transferred to sort of the new job you really want to do. And if there's a mismatch, if you don't have the right skill set, what is the most effective way for you to bridge that gap and get where you want and get yourself ready? And once you are ready, in terms of the hard skills, all it takes really is how much passion you can really come up with for the job that you want to do. Right. So again, there's no late starter. You can start anytime.
Thank you, Dr. Zhang. And since we seem to have a little more time, this question will be directed to Mr. Sherman He, if that is okay with you. And it's mostly about your company, Stori. So I'm sure as many audience members are wondering as well, what was your main motivation to start Stori, and how did you go about it?
That's a very interesting story, which is a story itself, right? So I sometimes was half joking, half serious that I call that mid-age crisis, because I had been at the enterprise for too long. And I know I learned all the skill set, how to survive at the enterprise, at the company. I know how to be successful. I know how to play those political games in the way that's how enterprise operates, right? But at one point, I also was thinking, what can I learn next? And so I feel like I don't have many 6 months. This is personal, like, but this doesn't mean working at enterprise is a bad thing, by the way. This is just a personal choice at the moment in the life. So I will think about I don't have many 6 months in my life. If I want to do something meaningful, if I want to make the very meaningful impact, if I want to leave the legacy behind me, what type of things can I do? I started thinking about what change I can make, and that's when I started to think about startup, because I think startup is where you have less constraint. You have more constraint in the resource perspective, but in terms of what you want to do, how fast you want to do that, and what level of impact you want to make, you have less constraints. So I decided to start a startup. I would say that journey was pretty hard. And I remember that I was in San Francisco. I was in the investment meeting with the tier 2 investor. And 5 minutes or 10 minutes in the investment discussion, that partner was just said, hey, I'm not interested in this. You haven't thought through this one. You can keep presenting, but presenting to a rest of my associate, I have to go, right? If you think about that, by then I was fairly successful at Capital One, leaving Capital One, like that was very hard on me. But that was a very good learning experience if I turn it around to think about differently. It means that I start to think from different angle. To think about how I want to be successful and what type of impact and what it takes to make the impact. Then after that, I think we got lucky and we start to have lots of interest in what we do. We engaged the McKinsey who select the country for us, and we have been fairly successful. It has been lots of up and downs. And I think that actually, in a way, I want to encourage some of you, if you are interested, to join startup. Because startup is one place you will accelerate your learning in a very hard way, in a short amount of time. We hired lots of people from Capital One, and one thing they all shared with me was, we have 100 times higher frustration, but we have 100 times more excitement and fast learning in the startup environment. So I don't know where Stori is going, to be honest. It has been very successful as of now, and we are getting close to unicorn in the market that is not in China, not in US, which is quite interesting, right? But I think for my personal journey, the biggest learning I have out of that is I have learned a lot from many different aspects. And this is why I encourage some of you to explore different world than enterprise, than trading.
Thank you, Mr. Sherman He. So I'm afraid that tonight that will be all the time we have for questions. And on behalf of the whole BranchOut career panel team, we hope that everyone in the audience enjoyed this panel and the information provided. And I hope that we all learn a great deal about successful individuals in the investment industry as well. We hope that everyone got a chance for their questions to be answered and learn some things inside of the experience from our 4 panelists. And speakers, do you have any last words or any add-ons you would like to mention before we close tonight?
If there's one thing I want to add is, I feel it may not be realistic for all of you to know what you are passionate about. But I really want to encourage you to explore what you are not passionate about. I know I wanted to study finance because I think there was a sense of incentive, financial incentive, but I don't necessarily think that was right. And in a way, I don't feel personally, I feel passionate about it, to be honest. But some of you may, right? Some of you may feel more beauties in the finance area than just the financial incentive. But knowing what you are feeling excited about, knowing what you're not feeling excited about, that's quite important. So dig yourself, finding who you are, finding the light inside of you.
Yeah, I couldn't agree more. The only thing I would add is, don't be afraid to take chances. So end of the day, you're so young in your career, don't be afraid of failure, because like most of the, Asian parents, typically, they are always risk averse. So they're always saying, hey, maybe you will fail in this task. So this is the best time to take chances. And then once you learn a lot from failure, and then there's nothing to be ashamed about. So basically, I would suggest take chances now, learn a lot. I would rather say you would rather fail when you're young than fail when you're a mid-career or a senior level executive, right? So definitely don't be hesitant to take chances. Go ahead, and then it's pretty exciting world out there. So good luck.
All right. we would like
can
to
I-
give. Oh, would you like to add on as well?
Sorry, I was just
Mm.
wondering whether Dr. Zhang wants to say something, but let me just first say what.
No, please go ahead. Please go ahead.
Oh, I'd like to say what an honor to be here. I love this panel. I like all of you. One thing, somewhat of a precaution out of a Chinese background. I think it's very, very important to understand that career, job, work, profession, it's only part of your life. It's not your life. It's only an aspect of your life. Because what happens is that if you take a career and profession to be unlimitedly connected with your own identity, so in other words, you're defining yourself by what you do, then when you're successful, you become very, very proud. You become proud, or you become blind to your own shortcomings and weaknesses and stuff that you need to improve. And when you fail, you become very, very dejected. You start to lose sight of who you really are and your own value as a human being. So yeah, try the best you can. Always do your best, but understand that career, success, profession, it's only one aspect of life. There are many, many aspects of life. You never stop learning. You always learn. You always improve. Thank you.
Yeah, so strong second that who you are and what you do, there are probably two separate aspects of your life. And my real experience with my daughter is that I have a daughter who is about to graduate college, and I just feel like that as a parent, I would think that you have not really explored your college life so fully, because ever since your first year, you start thinking about internship, like first year intern, second year intern, third year intern, leading to a return offer, so on and so forth. But at the same time, you become so focused on the one thing you want to pursue instead of trying to, really exploring, really using the opportunity to explore the rich curriculum, the college, there's so many wonderful colleges in the US that could offer. But then maybe I just don't get her. Maybe she's just so single-minded. And so this is she has already found her true passion. This is the one thing I want to do. So I'm going to do whatever I can to get what I want. But I think just sort of as an older generation to the a lot of aspiring young people, don't be shy in this new world. Whatever you want to do, try it, and there's nothing to be afraid of. And you'll do fine. You
will do fine, and don't let money define you.
Yeah, absolutely.
Thank you, Dr. Zhang, Mr. Hota, Dr. Duan, and Sherman He. We're very appreciative of the information and the things that you shared about your experiences starting up and throughout your careers. And on behalf of the whole BranchOut team, we would also like to say thank you to the audience to make this whole career panel possible. And we hope that you have gained some good insight and experience from our 4 panelists. We will be having more future panels, career panels just like this, and many different other topics that may be upcoming or maybe interesting. And you could sign up for them at www.velbranchout.org, or you could like us on Facebook at Veritas Education Leaders. Our next panel will be on the 18th on this Wednesday, and it's on the psychology career panel. If you're interested, be sure to sign up, and we look forward to seeing you there. Thank you all for attending tonight's career panel, and we hope you learned something great.
Thank you all.
Thank you.
Thank you.
Thank you.